Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of company filings to uncover the real story behind the numbers. And today we're looking at Pagaya Technologies, and wow, they've got a filing that is a bit of a time capsule and a peek into the future all at once. So imagine you just filed your yearly report and then just a few months later, you are filing an update. That is kind of what Pagaya Technologies is doing here. They're essentially representing some financial information. Not because anything went wrong with the original filing, but to get things ready for a future stock offering. This is a bit like tidying up your house before a big party, making sure everything looks just right. This filing is about Pagaya Technologies Limited, ticker symbol PGI, and it is all about updating their financial picture for a specific reason. They're getting ready to file a registration statement, which is basically a document that tells the US Securities and Exchange Commission, or SEC, that they plan to offer more stock in the future. It is not that they're selling anything right now, but they're preparing the paperwork. The main point here is they are filing an updated version of their financial statements. Think of it as adding a new chapter to their financial story, but this chapter is mostly about making sure the previous year's numbers are presented in a very specific way, which is called an unclassified balance sheet. This is important because it helps investors see the company's assets, liabilities, and equity without the usual breakdown into current and non-current categories, which can sometimes make it easier to understand the overall financial structure very quickly. Now let's dive into what is actually in this revised financial presentation. They are showing us the situation as of the 31st of December, 2024 and 2023. The big reason for this update is to present their financial position in a way that is consistent with future needs, like that registration statement we mentioned. This is done to make it easier for potential investors to evaluate the company's financial health when they eventually offer more shares. Looking at the details, they've updated the financial statements for the years ending the 31st of December 2024 and 2023. They are specifically representing their balance sheet. This means they are showing how much the company owns, what it owes, and what is left over for its owners, all in a particular format. It is like looking at a company's snapshot of its finances. When we look at the actual numbers, we want to focus on what is changed or what is particularly noteworthy. For 2024, the total assets are around $1.1 billion. Liabilities are about $792 million, leaving equity at around $316 million. This shows a company that has a good chunk of assets, but also a significant amount of debt. Now, moving to 2023, the picture changes slightly. Total assets were around $988 million, liabilities around $754 million, and equity around $234 million. What we see here is growth in assets and liabilities from 2023 to 2024, with equity also increasing. This suggests the company is growing and possibly taking on more debt to fuel that growth, which is a common strategy for expanding businesses. Let's look at specific categories. For instance, in 2024, their loans and finance receivables stood at about $375 million. This is a key part of their business, suggesting they are actively lending or financing. In 2023, this number was around $320 million, showing an increase in this important revenue generating area. Another area to note is their notes receivable, which were about $340 million in 2024, up from around $295 million in 2023. This also indicates significant activity in their core lending operations. These numbers represent money owed to the company that they expect to collect, and the growth here is a positive sign. It is important to remember that these are just snapshots. The actual business health depends on how well they manage these receivables and the risks associated with them. For example, the loss rate is a critical factor. If that rate starts to climb, it means more of these receivables might not be paid back, which would hurt their profits. The unclassified balance sheet format means we're not seeing a clear split between short-term and long-term liabilities and assets. While this simplifies the presentation for certain purposes, like this registration, it can make it harder for a quick glance at immediate financial risks. Investors usually like to see how much debt is due within a year versus later. This format makes that less obvious. Pagaya is a company that operates in the financial technology space, often described as a networked finance business. They use technology to connect consumers with financial products like loans, and also manage investment funds. So, the growth in receivables and loans is directly tied to their core business model. Now, let's consider the equity. In 2024, equity stands at about $316 million, up from $234 million in 2023. This increase in equity could come from profits generated by the company, or from issuing new shares. The fact that equity is growing while assets are also growing is generally a healthy sign, indicating the company is building value. The filing mentions outstanding warrants. Warrants are like options that give the holder the right to buy shares at a specific price. These were issued when the company went public. So this registration statement is also about making sure those future shares from warrant exercises are properly accounted for and ready to be issued. Overall, Pagaya Technologies seems to be in a growth phase. They are expanding their lending activities as seen in the increasing receivables, and they are preparing for future fundraising activities. The company's strategy seems to be focused on leveraging its technology platform to facilitate more financial transactions. However, it is always wise to look closely at the details beyond the main balance sheet. The report touches upon related party transactions, which involve dealings with entities or individuals connected to the company's management or significant shareholders. While not inherently bad, these always warrant a closer look to ensure they are conducted at arm's length and for the benefit of the company as a whole. Pagaya also operates in a complex area involving variable interest entities, which are essentially structures that help manage risk and capital. Understanding their role and Pagaya's relationship with them is crucial. The filing provides disclosures on whether Pagaya is the primary beneficiary or not, which impacts how these entities are consolidated onto their financial statements. When we look at fair value, especially level 3 inputs, it means the valuation relies on internal models and assumptions that are not readily observable in the market. This is common for certain financial assets, but it introduces a degree of subjectivity. The disclosed ranges for discount rates, loss rates, and prepayment rates hint at the assumptions behind their valuations and associated risks. A wider range could mean more uncertainty. So, what is the big picture here? Pagaya is clearly in an expansionary mode, making moves to support future growth and solidify its financial reporting. The updated statements provide a clearer view of their financial structure, especially with the unclassified balance sheet, which can be helpful for understanding their overall financial leverage, the growth in their core lending. Related assets is a positive indicator of their business operations. However, the company does carry a notable amount of liabilities relative to its equity, and the reliance on level 3 fair value inputs for some of its assets suggests there are inherent estimations and potential risks in valuing those holdings. Investors should keep a close eye on how they manage their debt and how effectively they can collect on their growing receivables. Alright, that is our breakdown of Pagaya Technologies' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out our Discord community for more real-time discussions, the link to which is in the description below. Thanks for watching. See you next time.